First, we start off with tech taking a tumble. The Nasdaq falling nearly 2% for its worst day since October 30th. The Nasdaq 100 ETF, the Qs, breaking 11 straight days of gains. And just look at some of the big moves from big tech. Amazon and Apple falling more than 2%. So is today's weakness a healthy pullback or the beginning of something bigger? Tim Seymour, I'll start off with you.
Well, was the pullback that we had on September 2nd, which was 14% in, I don't know, 8 or 9 sessions, was that healthy? We came back to set new highs. So none of this should be taken as an alarm. If you think about it, semis were down 3%, yet are still up 4% over the last 5 trading sessions. I think, look, the DoorDash IPO and the Airbnb pricing kind of have this feel of ringing a bell of sorts. But I just think if you saw the high momentum tech stocks, and that includes Tesla, a Zoom, a Peloton, you name it, they were down significantly today. And it just felt like it was a day to take a little momentum off while everybody looked at what was really an absurd and absurdly positive, of course, for DoorDash. But nonetheless, it does tell you where the froth is.
Could it be, Guy Adami, do you think, a ringing of the bell? I mean, after 11 straight days of records, which is where this show yesterday started off. I wasn't here, but I was watching you all the time. And plus the apparent frothiness in the IPO market. I'm not going to cast judgment on whether it's froth or if it's justified. But what do you think about that notion of ringing the bell here?
First of all, I know you weren't watching. I also know that if I asked you who Nigel Tufnell was, you would have no idea, like Dominic Chu, which was pathetic, by the way, Dom, if you're watching. And I think it's so obvious that, DoorDash could be ringing the bell that it's probably not. I'm sort of in the Tim camp that it's a healthy thing. And I think in terms of the tech trade, and kudos to Steve Grasso, by the way, who's been on this rotation, I think you're looking for opportunities to where to get in or get back in, specifically a name like Alphabet, which, again, go back to the quarter they reported a month and a half or so ago. That was a historic quarter for them. And I said it that night. I've said it a couple times since. I think you can make an argument that the Alphabet at these current prices is cheaper than it was on a valuation basis 2 months ago. So to me, the market's giving you a shot at buying some of these names that got away from you at better prices and valuations.
Steve, as somebody who got out of these names, are you looking to get back in? And I would point to the disparity in performance today between the Nasdaq, which tumbled, as we mentioned, almost 2%, the Russell, and the S&P 500, which emerged from the day with losses about 0.8%. So very different. So it's really technology feeling the pain here.
Right. So if you look at it, this is not a blip that I'm looking for. I'm looking for the outperformance of tech over value has been going on for about 10 years now, maybe longer. So for me, I'm looking for an outperformance for the next year or so. Now, I'm not looking for an outperformance for a week or so. So what was it today? You mentioned a lot of good reasons. JP Morgan said that Tesla was overvalued. That's been going on forever now. If we look at the antitrust case with Facebook, that's another reason. We saw Zoom downgrades. That's another reason. Where are you going to get your quote unquote value? Diversified chemicals. You know the names that I've been in: TSE, WRK, OLN. These are names. And then if you look at Capri Holdings, you want to look for companies that are levered to Europe, not just here, because I do believe the reflation trade is on. That's why value will continue to outperform. And I think that the market is overlooking the chances for the Democrat to take the Senate. If that happens, value will outperform grossly. Market will sell off. A knee-jerk reaction market, everything will sell off. Value.
I think we're having problems with Steve Grasso there. We'll go to Pete, though. Pete, I know you like a deal. I mean, you're a Maxxinista. You shop at TJ Maxx and, all these deal places. But you're primarily a momentum guy. So going into year end, where is the momentum in this market, in a market where it seems like technology is sort of going sideways at this point or hitting some sort of ceiling?
Yeah, you're exactly right, Mel. And technology's hit a pause, and I do think it's a healthy pause. When we've watched what's really been propelling the Nasdaq to the upside, it's been semiconductors, it's been biotech, which have both been at all-time highs, and it seems like the semis almost every single day have made a new high. So Yeah, there are different pieces of the market as we move forward, but I think there are a lot of different areas, Mel, that we've seen for the last 4, 5, 6 weeks now. It's financials, it's industrials. There's a lot of different areas of the market, basic materials. When you look at a lot of these various areas, you are really seeing a nice, swift move to the upside. And so I like what we've seen there. I think it's healthy to see a little bit of the diversion away from certain areas. And Tim was exactly right. I mean, the pressure that was on today on Zoom, on Tesla, on all of these names, and then throw in some of the big tech names on the big pull off as well from where they just had ran to. I mean, a great example was even Apple. I like Apple. I think that it's done a lot of things the right way in terms of the improvements. It got down to 105, then started moving to the upside again and got up towards that 125 area. But taking a healthy pause makes some sense to me, Mel. So I think there are a lot of areas of the market that are still working very, very well. And I think those are where the opportunities are. And I think you have to be very selective when it comes to technology, because those overgrowth names that have absolutely no PEs because there is no P, those are the ones that I think, or E rather, I think those are the ones that I'd be a little bit nervous of. I think I'd be staying away from some of those high flyers.
Tim, do you have a question? You were raising your hand.
Well, I just, Pete, were you staying away from the beach today? It looked like you were doing the halftime report from the beach. And were you wearing sunscreen out there? I'm just curious.
It was a wonderful day here. I'm down in Florida. I'm absolutely loving it. But I will tell you, I just had dolphins jumping behind me here. So you might see some dolphins while we're doing the show behind us, because there's a family of them going by just a little while ago.
We will be watching, that's for sure. I know Guy's a big dolphin lover. I mean, it started with Flipper way back when. Guy, I want to ask you, though, I mean, for a lot of people in the markets, they're looking at the sell-off in some of those high momentum names that Grasso was talking about, the Zooms, the Teslas of the world, and then they see the amazing performance of a DoorDash on its first day. So how do you reconcile that? What does that tell you about the market we're in right now?
Listen, you can make an argument that the reason why you saw that big sell-off in Zoom and some of these other names was maybe there was money going out of there into a DoorDash. I mean, that's one explanation, amongst many, by the way. I mean, the DoorDash, this is very similar to Snowflake we saw when they priced, and then the subsequent where the stock was trading. I mean, I can wax poetic about how poorly I think these things are priced and what a disservice they're doing to the retail group, but we'll talk about that later. I just think in terms of the names you just mentioned, Pete just said it and Tim said it. I think Steve said it as well. It's just a healthy pullback in a market that's probably gotten itself a bit over its skis. It doesn't mean these stocks aren't investable or tradable, and I will continue to go back to some of these names, specifically Google, because, again, if you sort of dissect their quarter, I will say out of all the quarters I've seen doing this show for a long time now, that's got to be a top 5 quarter. And I think when things normalize again and people realize the balance sheet they have, the number of levers they can pull, Alphabet is one of those names that's probably going to be, we'll talk about the next 2 trillion club. I think that could be one of the names in it.
Pete, what tops your list on tech names to buy right now?
Well, I think some of the quality names that are pulling back a little bit, we're seeing some positive momentum in terms of the options world, Mel, in a variety of these names, whether it be Microsoft or Apple or some of these names, as they've eased back. Even today, I saw some very positive paper in Apple, but they're going out. They're buying a little bit of time. So I think those quality names, whether we're looking at a Google, we're looking at an Apple, we're looking at Microsoft, any of those names. And I know we're going to talk about Facebook later on as well because of some of the issues today. So I think there are some opportunities out there, Mel, in some of these quality names. I still like Salesforce, but I'll tell you what, it does start to feel a little bit more lofty all the time as I look at some of these names, because some of them just have not pulled back quite enough. And I'm sort of waiting for that opportunity.
Shepard Smith here. Thanks for watching CNBC on YouTube.